your pick of the pack was IDFC first. You would look at any of the others?
I think within the small finance banks, the new ones which have got listed, I think the best-in-class growth rate has come from AU Small Finance Bank. And despite such, lockdown and pandemic and all, if you study their credit costs, they've been pretty much under control. And in terms of credit growth and overall improvement in the qualitative factors, they have done far better than the likes of Ujjivan or Equitas. So, of course, it's a little bit more expensive than its peer group, but that's completely justified given its track record and impressive growth rates, even during challenging times. So, again, a disclosure here, I think that's the best pick as far as small finance banks are concerned. I think Ujjivan, Equitas have been a bit disappointing in terms of what their growth rates have been once they've been converted into a bank. They had to face a lot of higher costs in transitioning as well. And I think the sentiment did get a bit affected because of this holding company had to get converted, or rather had to make an IPO for its subsidiary company, and then the holding company got into a holding company discount. So from that point of view, I think both Ujjivan and Equitas Small Finance have not yet completely delivered, but the likes of AU Small Finance Bank, IDFC First have done exceedingly well.
Okay, Dipan, I have a question for you on some of these PSUs which had a big rally yesterday, BHEL, ONGC, SAIL. Any thoughts here?
See, I think, Anuj, from time to time, you are going to see trading plays in these companies. They are so cheap, well available, well below book value, high dividend yields. And there is this entire, change of wind that investors should try and get into value stocks, and not just in India. I think globally, there is a kind of a move that at least allocation to value stocks should move up. And clearly, India's PSUs are the ultimate value stocks, given that they have strong cash flows and a lot of dividend yield and available attractive valuations. But I don't think that, from a longer term perspective, if you take a 3 to 5 year type of a view, you will make too much of money in PSU stocks, whether it's banks or any of the other enterprises. End of the day, you need a very strong trigger for the PSU stocks to move up. And I was hoping that BPCL and this whole privatization theme could be the trigger for the entire PSU pack. But the way BPCL bids have come, I don't think that it's going to be such a grand success, at least at this point of time. So while you may see a good 25-30% rally, certainly possible in a whole host of PSUs as they come back to mean averages as far as their Ps are concerned. But it's not going to be a secular growth story. It's not going to be a compounding growth story where investors can buy and hope that the stock will double, triple over a 3-4 year period. So those kind of situations I don't foresee as far as PSUs are concerned. But yes, because of their attractiveness, you will see very strong trading rallies from time to time. And I think investors who have a trading mindset can certainly look at participating in those trading rallies.
Okay, well, Dipan, we'll just come back to you. By the way, I've been wanting to tell you, Dipan, I just absolutely love that background of this collection of photographs that you have of your family, especially the black and white ones. It just reminds us in this pandemic about how what matters the most is your family, right? I mean, work, everything aside, it's family.
Is Anil Bhai's picture there?
pictures.
Can you focus on Anil Bhai's picture? He was my boss, my first boss.
Well, his picture is there, but unfortunately, I can't focus on over there.
All right.
No,
Dipan's father was my first boss.
Oh, really? Okay, I didn't know
economic
that.
times.
But they look lovely. I mean, I've been always wanting to tell him that. I got a chance today. But anyway, we'll come back to you. Many more questions for you, Dipan, in a bit. Let's go across to Nigel. He's going to talk about our favorite topic, momentumizers, and let's find out what's on his list today. Nigel, over to you.
Well, the stock that we're focusing is on Dr. Reddy's. Remember, from March till September, the stock did very, very well. But from September 21st, the stock has been under pressure and it's been underperforming. So it's not only underperformed the Nifty, which is up close to around 15%. It's down nearly around 15%. It's even underperformed the Nifty Pharma index itself. But what happened in yesterday's trading session was the stock ended higher, with a gain of close to around 3.5%. Remember, the high that it made earlier this year was around 5,500, so it had already corrected around 15% approximately. But it hit the 100 DMA yesterday, and in fact, it did bounce off that, which is an encouraging sign. So the 4,600 mark becomes extremely important. Now, the move was backed by both stronger volumes as well as good delivery. So if you look at the volumes, it was nearly around double of what it normally does on the NSE, and that was backed by delivery as well. So on both those parameters as well, it's looking quite good. Now, given the fact that it can defend that 100 DMA, you'll have to keep an eye out on the stock futures, because there were shorts that were built into the system. If it can hold above this level, maybe, just maybe, the shorts could get squeezed out. So that's why Dr. Reddy's is our stock on momentumizers.
Oh, thank you very much, Nigel. That's such a good pick because the momentum seems to be coming back to the pharma stocks, and you've picked the biggest one in that pack. Dipan, that question to you. We've seen the stay-at-home stocks or the COVID-proof stocks once again coming back into fashion in the past 2 days. You saw Pharma, IT and Reliance becoming favorites. Your thoughts on the Pharma pack first. Would you back any?
Yeah, absolutely. I think we are looking at increasing exposure to pharma at every given opportunity. And I think Dr. Reddy certainly is one of the best picks within the pharma space, and it was quite well covered by you. I think that after many quarters, we are seeing very strong growth in Dr. Reddy's. They've taken care of some of their issues as far as US FDA is concerned, and have got focused on certain very strong products in the US markets, which will contribute significantly to the top line and bottom line. But there's one company that we are quite positive on, again, disclosure over here, and that is Alchem Laboratories. It's a low-profile company and got a sizable domestic business as well, which got mildly impacted by antibiotics. But now I think India revenues are coming back very strong, and they have a good pipeline as far as US generic products are concerned, and I think valuation is also quite reasonable at this point of time, and pretty large-sized company as well. So while the likes of Cipla, Dr. Reddy, Divi's Labs have moved up significantly, this is one company which has underperformed the pharma group, and maybe I think investors could have a look at it. I think it's got a stellar track record as well. But nonetheless, I think pharma shares are going to be in limelight for many more quarters or years, I would say. And the underperformance which we had seen from 13 to 17, I think a lot of that is going to get completely reversed. And again, they could be very decent wealth creators over the next 3-4 years or so.
I also wanted your thoughts on Motherson Sumi. I mean, the stock rallied 5% yesterday on the back of aggressive guidance from the company. But the company has also said that 25% of that guidance will be achieved through entering into new divisions. And they've spoken about diversification into the aerospace industry, logistics services, health, etc. Would that rattle an investor that they're moving away from their core auto business? Or do you think that it's a good expansion strategy?
See, Sonia, I've been tracking Motherson Sumi for the past several years, and what is a bit disappointing is the way the management handles the expectations of the investors and the analysts. And it's one company which the management talks very aggressively, but you look at a 3-4 year type of a track record and it's not as impressive. Return on investment has been traditionally at a very low level, and some of the new capex plans, the new plans which they set up, took inordinately long to get back into profitability. And it's a very acquisitive company, and although it has been successful, but this is not a sustainable strategy. And I feel that at the present valuations, I think more or less all the positives have been completely priced in. So I wouldn't want to chase the stock at this point of time, although auto ancillary will offer great scope considering that OEMs are doing much better. But I think the likes of, say, an endurance technology, that may be a bit better than maybe Motherson Sumi. Again, they've also got a good, decent export business. And then there are the likes of Minda Industries and Minda Corp, which have had a fantastic track record when there was a good times in the auto industry. And now I think they'll come back into reckoning. So I think that Motherson Sumi is generally an aggressive company, but look at the financials. I don't think they're as impressive last 3-4 years as some of the other auto ancillary companies.
Okay. Thanks for that, Dipan, but do stay on. We have lots more questions for you. A quick break. We have to get our technical expert